So I'm going to be talking about how to reduce your audit cost. And in a seminar that we did a few months ago, we briefly touched on that a bit. And today I'm going to get into a little bit more of the detail and a little bit of repetition too. Because as Tony Robbins used to say, repetition is the mother of all skill. So some of it, I recognize some faces that have been here before, and we want to just kind of reiterate some of the points. And so I'm sitting there with my dad the other day, and we're having dinner, and I'm telling him about the seminar. And my dad's not an accountant, but he is a business guy, and I say to him, I'm doing this course and about how to reduce your audit costs. And my dad's an old school business guy, and he kind of looks at me and goes, well, like, what are you doing? Like, why would you do that? Why would you? Aren't you the auditor? Aren't you the one who's charging fees and so on, etc.? And I said, yes, but times are tough. So, we're getting pressure on audit fees, and lawyers are getting pressure on professional fees and engineers and so on. And I think everybody in this room, plus or minus, knows that. So then we say, but our cost base still remains high. So, in alluding to Grant's first comment is that we really are all in this together. And what we want to convey here today is what are the things that we can do to make us more efficient? Because we need to get more efficient. When times are good, efficiency often gets lost, and because you're too busy thinking about other stuff. But when times are lean, then we have to have a look at that. And so we're reaching out to you to help us to reduce audit costs. And a lot of what I'm going to say, admittedly, will involve trying to get you more involved in the process and asking you to reach out to us just as much as we reach out to you. Now, before getting into some of that detail, though, I want to go through what I call my top 10, questions you always wanted to ask your auditors, but always were too afraid to ask. And so I'll begin with that a little bit. Okay, and then feel free, of course, at the end of it to expand on any of those. So the number 10 question that you're always afraid to ask your auditor, but always wanted to is, how do auditors charge? Well, we establish a charge-out rate, and that charge-out rate is based on experience and complexity of the engagement, etc. And that charge-out rate typically is a judgment call on what we feel to be in the engagement. So we do that, and then we multiply that by the number of hours, and then typically we apply a discount because we don't expect to recover all of our time, especially if there's time that was inefficient, etc. But it's actually a quite simple formula. So we just have a charge-out rate, number of hours, applicable discount, and that typically gets to be our fee. So of course, if you look at that screen and if you can see it, the key number there is the 5, because the 5 is the amount of time that we have spent on the engagement. And so what you'd want to do as a client is to try to minimize that in order to reduce your cost. The number 9 question, why do audit bills always seem to be an even number? And that might be the same for lawyers too, but I get that question sometimes. Like, how come every audit bill that I ever see going through the door is $5,000? Did you really incur $5,000 worth of time to the penny? Well, the quick answer to that, no, we didn't. We tend to round it down. So whenever you see audit bills and you say to yourself, well, why is it exactly $10,000? It probably means we may have incurred $11,500 in time and we wrote it down. But that question has come up before. So we do round it. Number 8, how many auditors read my financial statements? So a lot of times, you get comments from a staff, and then you say, okay, great, these are the comments on our financial statements. They didn't really pick up much, a few adding errors maybe, and I'll correct it and I'll send it back and we're done. And then you sit there and all of a sudden a few days later you get another set of comments and you go, well, this is a little bit more than the first one. And then you go, okay, fine, I'll deal with it. And then another week goes by, and then you get the partner's comments. And that's where a lot of the tough questions get asked, etc. So the reason why that is because there's a number of people who read your financial statements. And part of that is a requirement. For example, for every public audit out there, you must have both a lead partner and a concurring partner. So legally, you have to have 2 partners read your financial statements. As well, typically you'd have a manager who'd read it as well. And more often than not, a senior or a junior who will do the footing and the adding. So in general, your financial statements are going to be read by about 3 to 4 people on a typical engagement. Number 7, who came up with the auditing rules? Well, the quick answer is other accountants do. But officially, it's the Canadian Auditing Standards Board. So what happens there is, and I think it comes out of Toronto, but they sit in the ivory towers in Toronto and come up with these scenario based on big companies, and they set up the rules. Of course, more often than not, the auditing rules that are placed upon large corporations are also placed upon smaller corporations. And in practice, those who set the rules, as we know, are not always the ones who practice the rules. And theory and reality are two different things. However, we are required to follow them. So it's the Canadian Auditing Standards Boards who come up with it. And most of the time, it's accountants who are either in retirement or used to be in industry and have now turned into that world. Number 6, why do audit reports always use the words fairly stated when discussing the audit opinion? Does that sound familiar? You know those audit reports, that one page we give you and we say a lot of things, and at the end of it we go, in our opinion, these financial statements are fairly stated in all material respects. Does that, everybody see that word, fairly stated? Fairly stated. So why do we use that word? Why don't we say, these numbers are good, or these numbers are accurate, or these numbers look good? The reason why we say that is because it's the best term that we have found to say we feel good about the numbers, but we can't guarantee them. That's really what we're trying to say. So when we provide an audit opinion to you, we're saying they're fairly stated. We're not saying they're accurate, because if we say they're accurate, that means we're giving you 100% confidence that there's just no way there could be a material error in it. That's the terminology we'd use. Number 5, can email be used as a form of audit evidence? And the answer is absolutely yes. In fact, it's becoming more and more commonplace. Confirmations, we're seeing them often in email. And if you see most of all legal cases out there in the world, whether it's auditing or accounting or otherwise, email now is pretty much uses 90 to 95% of evidence. I mean, it's huge, and it's dangerous and it's tricky, so we always have to be very, very cautious about what you say in email, because it could be construed later in a way that you didn't necessarily mean it. But the quick answer is absolutely. Email is becoming more and more and more a form of audit evidence. And of course, the key is that as long as the source can be reasonably verified. So it isn't one of those things where if we get audit evidence in form of an email that we just stop. We may take it another step further to verify that the sender truly exists and is meant to be the person who replied to the email. Number 4, who is responsible to approve financial statement, the audit committee or the board of directors? Anybody know that answer? Anybody know? Somebody must know. So it's the board that approves the financial statements, right? It's not the audit committee. The audit committee is the organization or committee that recommends for approval over the financial statements. Now, the interesting point, and I don't know if there might be some lawyers in the room, but I believe for quarterly financial statements, the board of directors can indeed delegate that to the audit committee. So if there's a choice at the beginning of the year where there's a complicated board and it might be global in different countries of the world, they can delegate that responsibility to the audit committee just on a quarterly basis. So if there's ever any doubt there, if you do have one of those boards that often is difficult to get together, and I know some of you do, then you may want to consider at the beginning of the year if optimal for you to get the audit committee to approve it just on a quarterly basis. Okay. Number 3, do the auditing rules vary by industry? For example, if we audit a mining company versus a tech company versus a lumber company, etc., do the auditing rules vary? And the quick answer is no, not much. An audit's an audit. So in general, the auditing rules are the same for all industries, although there are industry-specific standards. So for example, if you're in the oil and gas business, you are going to have certain pronouncements that are more applicable to you, and that's the same thing with technology and mining. But in general, an audit's an audit. We have to plan it, we have to perform procedures, we have to complete, and so on. Number 2, why are audit descriptions or audit bills so brief in comparison to legal bills? I've received that comment quite often. It says, well, okay, you send the invoice and it says audit of the financial statements for the year ended December 31st, 2012. $25,000, one line item, right? And that's it. And when you open the bill and you look at it and you go, well, it seems awkward, right? And then whereas when you get your legal bills, you're going to see all these descriptions, right? And a 10-minute phone call to John Ray, and we discussed the potential of going public in Frankfurt versus going public in Dubai, and we're going to talk a little bit later. And then it just goes on for pages and pages and pages. And I've always wondered that myself, why is that? Like, do lawyers have to do that? Do you have to, send bills for like 10 pages? And how come auditors only have these 1 or 2 line items? I don't, and I've asked lawyers that question, by the way, and I don't think the Law Society requires you to do that. I think it's just common practice. But from the auditing standpoint, the reason why our descriptions are so brief is because we want to be careful on what we say we did. For example, if the description of the bills are more so than just the auditing services, it could be construed as an independence issue. So, if we sort of list out all the conversations that we had with you throughout the audit, somebody may look at it and construe that and saying, well, what type of services did you provide these guys? Was it just audit only, or did you do something else? So auditors typically keep their bills very brief because we just stick to the service that we provide. Oh, no, oh, sorry. Okay, and the number one most common question you've always wanted to ask auditors but were afraid to ask. Other than chartered accounts, what else does the CA letters mean? Can't add. And I know some of you have heard that. So accountants, that we're famous for that. We use Excel spreadsheets and we're terrible at adding up numbers. Okay, so that's a little bit of the sort of questions that I often get from clients about various things. So now, audit fees, recent trends. So when I began with the firm quite some time ago and started in the auditing business, I remember a typical audit of various sizes would be just a few $1,000s. And when I began, my charge out rate at the time, I remember, was $40 an hour. And from today, when students come in to various firms, they'll charge anywhere between $100 to $120 an hour. So if you sort of sense the industry, what's happened in the last 13 to 15 years, audit fees have effectively tripled. Okay, which is and there's lots of reasons for that and why that happened. So fast forward from 1999, which is when I began, and then a few years later, Enron happens. A few years later, a number of other scandals in the U.S. occur, and regulation just gets beefed up. I mean, I remember when we started doing it was a different game. We'd focus on the financial statements first, and then we'd prep up the file. Whereas now, you spend so much more time on planning the file and completion of the file and the various memos and checklists that it's become extremely cumbersome. So a huge part of that is regulation. Regulation beefed up, in the early 2000s and has steadily increased since. And arguably in the last 2 years, regulation has probably become pretty steady, but we'd like to see it, of course, decrease. But as we know, while market forces adjust better, accountants, lawyers, and engineers, the regulatory body don't adjust as quickly as other market forces. So the sort of disconnect that's happening out there in the world today is that regulation has remained steady, but the market isn't what it was 2 years ago, at least not our market, the one that we're involved in every day. So we're coming to the table and we're saying, well, we still got to do all these things. We have to fill out all these checklists and all these memos, and we have to put together a whole file together, but the cost base for doing so becomes less profitable because regulation has not decreased. And so now that kind of leads into how do we get to a point where we can find that win-win, when auditors can still create efficiency and the clients can get a better value for the money spent. So reminder again, we just have the basic formula. We have a charge out rate multiplied by the number of hours that we spent on the engagement and applying a discount fee to get to that number. So how do we get those hours down? That's really one of the key things. The charge out rates get adjusted as well during tough times, but the key is hours. So how do we reduce time? Read the handbook. That one's really, really important, right? I think it's called the CPA Canada Handbook now, by the way. My original site said CICA Handbook, but I think we're CPAs now for those CAs out there. Are we? Are we CPAs now? I think we are. Do you know Enrico? Yeah. So the CPA Canada Handbook, which is the official title now, is that you can buy it online for $335. The last time I checked it was $250, but today it's $335. And you don't have to be a CA. You don't have to be a CGA. You don't have to be a CMA. You can go online and you can buy the handbook. So if you do accounting work or audit related work in your organization, just please buy it. Buy it because it's great. It's like Google. You go on there, you search a subject, and it comes to you. And the information comes right at you. And even if you're not an accountant, I bet you could do, once you use it 3 or 4 times, you can get quite good at it. So please buy it. So why do you want to buy it? The reason why you want to buy it is because when you read the literature, you are going to become a certified AMP. Does anybody know what an AMP is? Anybody? Okay, I'm glad nobody raised their hand up because I did make up that term, but AMP called Accounting Memo Pro. That's what you'll become. So the reason why that's so important is because if you become an Accounting Memo Pro, that means that you can research the accounting topic, and then you'll have the title, and then you'll know what the issue is, and then the literature will tell you your different options. You can come up with a conclusion. So the reason why that's so important is because we often find as auditors is that we are the ones who are often writing the accounting memos or accounting positions for smaller issues. And what we want to encourage you to do is to do it more yourself. And the way to do it more yourself is buy the handbook, search the topic, and put a discussion point. And I bet you have a very high chance of getting the accounting issue correct. If you don't, we will tell you. But instead of us having to do the research, coming up with the memos and the conclusions and bouncing ideas off you, if you take the first shot at it, I promise you it will take less time than if we just do it ourselves. So we really want to encourage that today. Buy the handbook, read the handbook, quote sections from it. So then you say, okay, all right, I'll spend the $300. I'll buy this accounting handbook you call CPA Canada Handbook, and I'll start doing some research on it and so on. But I'm not, I don't do public auditing every day. I am a controller of a CFO of the organization, but I'm not in this accounting world every day. How do you know what the issues are? So say I've got a December 31, 2013 year end, and I know what my last quarterly was. I see my last audited statements. I can read the accounting policies and all the sort of disclosures are there. And you go, well, how do I know which issues that you, the auditor, will bring up this year? How do I know what to do? That's a great question. How do you know what to do? And that's where we really want to encourage the planning meeting. So the planning meeting is typically a meeting where we get together, hopefully in person, and then we discuss. So if you've got a December year end, and let's say you're a venture issuer and you've got the 120 days, you've got a little bit of time. So what we want you to do, and we'll do the same, is reach out to us. And we'll try to reach out to you and say, look, we've got this audit coming up. I know it's a little bit early on in the process, but what do you say we get together for a coffee, for a lunch, or even just a meeting, and let's just talk it out. We don't have to decide everything, but let's set up a planning meeting. And in that planning meeting, we can talk about the risks of the audit. We can talk about the major accounting issues. We can figure out the schedules. We can talk about the budgets and the proposed fees. And of course, we encourage that to happen face to face. And so if we do this meeting today, right? So Enrico, we'll meet and we'll talk and we'll go through this. And then afterwards, if you buy the handbook, then you can know which issues to search. Because we'll tell you where we see the risk is, and we'll tell you which accounting issues you should be looking up. By the way, Enrico does a great job. I'm not picking you're standing right in front of me, and I always see you, so I'm just mentioning your name. But so that's we really want to encourage that to happen, and it doesn't have to be long. And it's an opportunity for us to see you. It's an opportunity for us to say hello, and it's an opportunity to just talk about what's going on in the world. I find that every time I meet anybody here in the room, whether we're talking about really anything, even if you're telling me what you did last night, I learned something. I don't think I've gone to a coffee meeting, to a lunch meeting, or to any appointment where I came out of that meeting and I go, oh, I really shouldn't have done that, or I didn't pick up anything from that. You always learn something. So the more we talk, the better off we'd all be. And again, we can talk about the schedules. When do you think you'll have preliminary information. When do you think you'll have your audit committee date? Enrico sent me a great schedule the other day, right? He gave me all the dates, and now I know exactly what to do. I know where I'm accountable. I know where he's accountable. And if those deadlines aren't met, then we can call each other on it. But the beauty of that is that it enables us to create a picture. If we don't put it in writing, if we don't put that schedule in an email, I don't think it's going to get done. So if we get together and you say, well, I think I'm going to have financials for you by about, middle of February. Maybe you guys can come in early March and do your field work. And the audit committee meeting should probably be around the end of March. What do you think? That sounds really good. That sounds really good. But if we don't have that in writing, if we don't have that in an email, I don't know if it'll be achieved. It's just like any other goal. What's the difference between a goal and a wish? A wish you don't write down. So we can want many things, but if I don't write down a piece of paper or an email, I'm less likely to get to that goal than if I do. So we just really want to push that. That's it on the planning meeting. Prepare working papers. That's another big one. So, when we put together an audit file, and I'll give you an example. Let's say cash. When we audit cash, in our audit file, typically we'll have a lead sheet, which will kind of show all your bank accounts and where you have money. And then behind that, we'll have our audit program, which will outline all the steps that we got to do. Behind that, we'll have a bank reconciliation. Behind that, we'll have copies of the bank statements. And behind that, we'll probably have a bank confirmation. And then behind that, we'll have the work that we do, the cutoff work. If you have foreign bank accounts, we'll do all the reasonableness tests on the exchange and so on. So that's cash. And what we'd like from you is we'd like for you to prepare that. So what you could do for cash is just, you could create a spreadsheet, for example, and then you could put all your bank accounts, and then you can references to the copies of your bank statements, and behind it will be the bank confirmation. So if you can set that up for us, then we don't have to set that up. And if we don't set that up, then we spend less time. So preparing working papers is another big area where you can reduce your cost. Okay, so that's, let me go through the points here. So I asked a student a couple days ago who's been with us for about a year, and she's been handling a number of audits, and it's easy for kind of partners to say what we think, but then I went, okay, what do the students think, right? What are the ones that are students or seniors, the people that a lot of you deal with during the audits, because the partners, of course, tend to either coming in the beginning and the end. And the students or the seniors says, well, if we just had clean records and all of our queries are getting answered and we're getting help with our outstanding list, this would be such a smoother process. So, of course, everybody wants clean records, but the important part is the queries and the outstanding list. And I know many of you have seen it. You'll see an outstanding list, and here's what we need to get done for the audit. And the thing about seniors and managers, when you have that list in front of you, and those boxes aren't ticked, and there's something missing, even if it's something that might appear minor, we get stressed because we have to get our outstanding list cleared up. And a lot of the items that we ask for, you may look at that and go, oh, why are these guys asking for that? Either I've given it to them before, or I don't think it's necessary. And yes, sometimes we do ask silly questions, and sometimes we do ask for things that are not 100% necessary, because when we're trying to get to know your organization, it takes us a little bit of time and it takes us a little bit of effort. So sometimes we may ask a silly question in order to ask the right question later. So what we're asking from you is to help us with that, to help us knock down an outstanding list. And we are conscious of the fact that we might be sending you an email with a list, and that some of the items on that list might not make sense. And so we're asking you to challenge us on that. If there's something that doesn't make sense, please do. Because what happens with managers and seniors is that they'll spend a lot of time on these outstanding lists, and they'll keep on re-looking at it, and then we keep on resending it. And so the more time that takes us to deal with those, the more the time goes up. And again, if you see any items on those lists that intuitively doesn't make sense to you, please do challenge us on that, because we're not perfect. We don't ask 100% of the right questions all the time too. Use our templates to save time. So at our firm, we've developed various templates for bank reconciliation, for stock-based compensation, for future income taxes. There's got to be some other ones too. And we like our templates. We like it because we build them and we're familiar with them and we know which cells to hit and so on. And you've got your templates, and your templates make a lot of sense to you. And often when we give you your templates or you give us our templates, we get a little bit confused. But what we want you to do is try to use our template as much as possible. Because what happens is, for example, if I look at a template for stock-based compensation, we've developed one that has all the sort of inputs. If you use that template and you give that information back to us, 50% of the time that we're going to take will just be the fact that we're familiar with the format. And that's the same thing for a consolidation working paper. So we'd encourage you, if you can, as much as possible, to ask us for the templates. And we'll give you all of our templates as long as you take a reasonable effort in doing so. It'll save time. Give us the relevant audit evidence only. Now that's easier said than done, but the point on that one is, sometimes when we ask for, we'll prepare an audit list and then we'll send it to the client, and then often we'd get something, well, okay, I put everything in a Dropbox. Everything is there. And then I open the Dropbox and there's just, agreements and all sorts of things and environmental studies and technical reports and investor relation agreements, all sorts of stuff that don't have to do with the audit always. And we don't have an issue going through every document. That's okay. But when we go through every document, it takes time. So what we're asking is just provide us just the relevant stuff. If there's things that you want to add on there because of interest or you think we may need, just ask us. Because the less you give us to look at, the more audit evidence that's clearly targeted towards the issue, the less time we're going to spend reading and wondering. And your organization, you know it best. You know it better than we do. So something that may take you 2 hours to go through could take us 4 hours to go through just because we're not familiar. So we really want to encourage you to only provide us audit evidence for what we're asking for, not for other documents that may not be relevant to the audit. And in line with that, we want you to prepare an audit binder so we don't have to dig for that information. So, I was doing an audit the other day, and all the bank statements were, again, dropped off and put in Dropbox. And I'm not that good in Dropbox. Like, I kind of get it. I have a login information. But, of course, I'm sitting there, and I'm out of town. So that means my internet is slow. And the internet is slow, and the thing is kind of going round and round and round. And in the meantime, I'm just sitting, and so, of course, time is passing by, right? Because I'm trying to download these documents in PDF. And all of a sudden, I don't have the right PDF version. And all sorts of things happens with technology, right? That may lead you to cost more time. So after about 10 minutes, when I started getting fed up, I finally said, well, look, do you mind just PDFing it for me? Do you mind just putting like the 4 or 5 documents right behind it so I don't have to go through all that? Because if I go through all that, I'm spending 2 hours of really no valuable time whatsoever. So we'd like you to prepare an audit binder for us. And that audit binder will have all that in there. Now, you don't have to print it because we are trying to get away from the world of paper, but you can create even an e-binder. Just something that we can just follow, stuff that we don't have to spend too much time downloading. Especially like the new generation is really good at Dropbox, right? But once you get, manager and above level that's still used to more paper and phone calls and things like that, we're spending too much time doing stuff like that. So please do that if you can. So prepare your working papers. Prepare your working papers. Okay, and another big one is streamline your financial statements. So the concept of only include what you need is really important. For example, all of your financial statements, whether it's quarterly or audited financial, will have this thing called recent accounting pronouncements. I think most people are familiar with that. And if you put all the blurbs in the recent accounting pronouncements, before you know it, 30% of your financial statements are talking about what's going to come up in the future, which Jessica will touch on shortly. But, if you're a mining company, you don't have to include what's happening in inventory if you don't have inventory. Or, if you're an exploration deal, you don't need to talk about the new policies under joint ventures if you have a simple structure. So you don't have to include what you're confident will not be applicable to you. If there is a pronouncement that may be applicable to you, you should put it on there, and then you can say what you think the effects will be and so on. But less is more, because if you put those accounting pronouncements, and I really like the companies that just summarize it in one sentence. You know, here's IFRS 12, effective for January 1st, 2014. We don't think it's going to be applicable to us. I like that because I don't think you have to put that whole paragraph below that discusses all the recent changes and, you know, and all the meetings that have taken place in Toronto about the accounting board setters and so on. Because if you do that, and going back to how many people read your financial statements, 3 or 4, now you're getting like 4 accountants reading the same thing that might not be applicable to you. So, you know, it's kind of, why are we doing that? And that would be the same thing for anything else, really. You know, for your accounting policies. The accounting policies, if you read that, and it's typically note 2, it says significant accounting policies. And that word significant is there purposely, because otherwise we would just say accounting policies. So you only have to include your significant accounting policies. If you have, you know, an immaterial receivable that's only GST, for example, you don't have to put an accounting policy because it's not significant for you. So only include the policies that you need. What else? What else can be cut down? On quarterlies in particular, you know, I've seen a few quarterlies that I really like, right? There's quarterlies out there that just are 2 pages, you know, and all they say, they have a nature of operations. I think they have the related party transactions, maybe segmented information, maybe 1 or 2 things. But really, if you read the quarterly standards, all they say is that you need to provide anything material that has changed since your last audit. For example, if your accounting policies are identical to what they were during your audit, then you don't have to put them in anymore. You can just say, these are interim statements, our accounting policies are in line with our previous audited statements, and there's no new ones. That's an example. Future income taxes. Future income taxes, you do not need to put in quarterly financial statements. Even property, plant, and equipment. If you didn't have any significant changes during the period, and all it was is amortization, you could take that note out. And that's no different for mineral properties too. If you have exactly the same agreements in place during Q1 as you did in the year end, you don't have to repeat the same information. Now, there's lots of companies who prefer, and there's nothing wrong with that, because a lot of companies will say, yeah, but I want to give, you know, the description again about my mineral properties, and that's perfectly fine. The only consideration that we'd encourage you is that if you're not in that situation, just cut it down. Because again, the less you have in those financial statements, and you have 3 or 4 people reading them, the less time will take to complete the engagement. And then the last point there is read your financials like you're auditing it. And because what happens sometimes is that, you know, we get a set of financial statements and we have to fix a lot of it, or we have to make a lot of recommendations. And, you know, sometimes, oh, well, my auditor will fix it, or my auditor will give me the suggestions, and that's okay. We actually don't mind doing that at all, but it takes time. So we really encourage you to, you know, when you read your financial statements before you send it to us, read them like you got to sign that audit report. You know, read them like these have to be right, because the cleaner set of financial statements that we're going to get from you, and again, 3 or 4 people are going to read them, including 2 partners, right, at high charge-out rates, then the less time it'll take all of us to do so. Let's see here. So that's kind of cover it, right? I mean, the real summary is let's keep talking. You know, we want to hear your ideas too. We want to hear your beefs. We want to hear your complaints. We want to hear what you think we do well, what we don't do well, because often, you know, as auditors, we're so stuck in our world that we don't ask enough feedback too from you. And we want you to give us feedback. We want you to say, I don't want you to email me anymore. I just want you to call me from now on. We want to hear that because we don't know necessarily. We want to get to know you better. We want to adapt to your styles as much as possible, because adapting to your styles will make the audits more efficiently. So we just want to keep the conversation going. And that summarizes my part. Cool.
Great.